Hey, what's going on, everyone? Sal here, back again with another video. I'm really excited to talk to you today about the price action we saw across this morning, this afternoon. I mean, it was a very bullish day for the markets, and I got a trade for you that I think is going to look really good over the next 30 to 60 days. Now, my BYND trade ended excellent. I mean, I couldn't have asked for a better trade in the BYND Beyond Meat. Go ahead and check that recent video out. My Roku trade has now gone back green. I knew it was a winner when I placed the trade. Unfortunately, the first couple of days after the trade, it ended up going, really red on us, and we had to make a decision and, had to let it go there. But sure enough, as you saw, Roku will not be denied. It's a stock that fakes out a lot of people, and now Roku is becoming the stock that I knew it was going to be, a stock that's between $140 to about $160. I think that's where Roku ends up for the rest of the month. We'll see. Only time will tell. Now, going back to today's price action, I think the best chart to look at it is the SPY. Very bullish today, ladies and gentlemen. I mean, an incredible day for this product. I think the SPX is probably a even better way to look at it. We'll look at it through a heavier product. So let's look at the SPX instead. And I like this heavier product because it really defines the price action a lot better than the SPY. And what we're seeing today in the market on the Standard & Poor's 500 is look at this candlestick. This candlestick is called a bullish belt hold. It is a very bullish indicator about price action and its possible forward momentum from here on out, that it could take it somewhere here. Now, we've seen this before, right? I mean, it's failed before, so it's not 100% perfect signal. But when you look across time, you'll find it very often right when it peaks above the Keltner channel. It's a very bullish sign that can lead to some really nice moves. You'll see it several times. In the SPY, SPX. In the SPY, it doesn't look so clear. It tends to have a small shadow underneath the body, but in the SPX, it's clearly defined as a bullish belt hold. And this is a point in time that, look, if you are shorting this market, particularly very close to where we are now, you only have really a few days to decide whether or not you're going to be in this thing, right? Either this thing pulls back, right, or we get a false signal, or you end up getting ran over. I mean, that's kind of what this what this candlestick tells you. You are possibly going to get ran over here. And don't look. I got some positions right in front of this thing, so I've got to make some decisions here because we only have somewhere between 4 to 7 days to see this either reject, or if we start seeing some support here at these prices, we got to get out the way and take whatever losses that we currently are standing on. So this is where we are in the market right now. I've got a trade that gets us in front of the price action, but not so close, right? And I think it's really important to be in front of the price action because right now I'm still not confident to be under the market. I don't want to be in an iron condor in the SPX, SPY. I'm playing the future side because I'm not able to get the leverage I want in the ETF or the index. So I'm in the options side of the E-minis, and that's where we're going to, really get most bang for our buck. So let me pull up the trade to show you how we get into this thing here. All right. So this is what we're in. We're going to be in a December 20th bear call spread. Right now it's at 65 days. You guys know I love this 60-day setup. We're going to buy the 31.30. We're going to sell the 31.70 against it, right, at 9 on each side. Or actually on just one side, but on each leg of the trade. we're taking in at 20. We're going to be taking in about $2,300. Buying power reduced to about 7,600. Look, if you wanted to get the chicken dinner version, hey, just risk less than $1,000. You're going to earn back $262 at max profit. Now, you guys, I like the 50% of max, and that's where I want to be over the next 30 days. I like this trade. I don't think the market has 130 points in it to run, but I do believe that we are going higher. Of course, taking this trade, I'd love to see a rejection. I mean, that works out in my favor. Or if the stock continues, if the market continues to go higher, I just don't see 130 points here. Now, granted, if you go back into the chart, you look at, for example, what happened in June. We saw a very similar candlestick, bullish belt hold. We ran almost 200 points. So again, in the SPX product. So you're going to have to change that in the whatever product you're using. But, we did run aggressively here. And, you have to remember in this situation, this was when we finally knew and had a date that we were going to get an interest rate cut for the market, and we got that interest rate cut and we ran on that. So, obviously we have another cut coming. I think the enthusiasm for another cut isn't there as it was at the beginning of the summer. So yes, the candlestick shows we go higher. I think we go higher slowly, but we go higher. So when you look at the higher time frames, we're above all my favorite moving averages, whether it be the weekly or monthly. I mean, the market still looks great here. I want to be in front of the price action. Again, I don't want to be below it because God knows what can happen. And if it's, besides, a comprehensive, detailed field China deal or a cure for AIDS or a cure for cancer, we are going to be, in my opinion, halted at about 30.60, 30.55. I think that's kind of where we are over the next 30 days. Nice move today in the markets, but I think we start to give that back over the week. We'll see what happens. Until then, it's your boy Sal. Again, take a look at my trade. I think you're going to really like this setup. I think this is a trade that is going to be another winner that I'll be able to put on my belt. Until next time, take care. Please subscribe.